Well, good morning, everyone. Thomas Montgomery here. We get together with our distribution partners and our clients most weekday mornings, 8 o'clock Central, to talk about strategies, tips, techniques, share success stories, and support each of you. We are modifying our process of client onboarding for our branches to now include the branch completing the personal financial statement. Previously, we were using our staff to complete this step, but it really didn't seem to be consistent with the design and intent of the private label branch model. So we need to get this step of the process into your hands. And to do that, we need to train you and, of course, support you in that. So let's talk about the personal financial statement, the PFS. This is a document that you will want to complete, you or someone on your team, for every client. So when clients enroll, they sign the agreement with you, what we'll call your branch credit and funding agreement. They will pay you the setup fee in full or the $250 down. You will help them complete the soft pull, which you have that link on your branch onboarding. And also you need to complete this PFS, personal financial statement, because once we have that data set, then you and us, we can sit down, not involving the client, but you and us, we can review the client's data and begin to formulate a plan of next steps. Because we know with the credit and funding program, we're helping clients improve their 3 C's: credit, collateral, and capacity. But we need an accurate understanding of their baseline, where they're at now, to determine what needs to be done to get them ready for funding. The PFS has always been an important piece of that, but again, effective immediately. We need the branches to do this step instead of our staff, because when our staff does it, we're violating that concept of the private label branch model. Make sense? So that's why the change, and that's when you collect it. You're going to complete this for every client before you submit them into us. We're moving towards, instead of you emailing client agreements in, we're going to set each of you up on a free Dropbox folder. And then so you'll upload into your Dropbox folder for each client the client agreement and the client PFS, personal financial statement. The soft pull link that you use feeds directly into us, so there's nothing physically that you need to put into the Dropbox, nothing physically you need to provide to us. That data comes to us automatically. So why is the PFS important? The PFS is a personal financial statement that allows us, meaning you and us as we're working on the client's file, to understand their assets, their liabilities, and their net worth. Why does that matter? Well, it matters in a few regards, but most relevant is it matters because we need to determine what type of collateral they're bringing to the table. Because we talk about the 3 C's, right? Credit, collateral, and capacity. This is where we figure out what collateral is that they're bringing to the table. So that's the backdrop on it. The form that we use is typically the SBA Form 413, which is shared on my screen. A few things that you need to know. We use this form regardless if the client's intent, or our intent even, is to get them an SBA loan or not. This is just a standardized form. There's lots of different formats of PFSs, but this is the one that we use. And then, of course, if we do progress for an SBA loan, we have the right one. Different lenders, you can search online, lots of different formats. So there's not just one type of PFS, personal financial statement form, but this is the one that we're going to use. Now, and I sent you the link to each of you last night as we reminded you of today's training, but you can just search SBA Form 413 if you don't have the link. Pay attention to the expiration date. It sounds kind of funny, like it's produce, right, in the grocery store, but all government forms have a unique identifier and an expiration date. So we want to make sure we're using the current one. This is not an application for a loan. So don't think that when we're filling this out with a client that we're applying for funding. It's part of a loan package, that's true, but this is not an application. It doesn't go to the SBA. It's going to go into the Dropbox, your Dropbox that we provide you as a branch under the client subfolder for us to review as we're determining the strategy for the client's capital raise. So that explains why we're using this form. It's a good template to use, but it's relevant regardless of the type of funding that we're going after. So don't worry. It's like, oh, I don't want an SBA loan. I don't want to fill this out. No, this is the form, the version of the PFS that we use. So we're standardized. Make sense? Everybody good? All right. So with the SBA form, the first page asks some questions. And the truth is, we don't care about this. We don't need to check any of these. We can skip the first page. That's not relevant. What's relevant is getting into the actual data that we need to collect from the client. I would not recommend just sending the link to your client and having them fill it out, because there's a very low probability that they'll fill it out accurately. Now, there are two schools of thought. You could give it to them, let them do their best, and then clean it up. But I wouldn't recommend that. I would recommend being on the phone. You could do it via Zoom, in person, however you want. But I really believe that you as the branch or someone in your branch needs to go through this with the client together. It is a weird format. And I'll go through. I used to work for the SBA. You've heard this story. And so when I first got hired by the SBA, they sent me to Washington, D.C., and we spent about 4 hours getting trained on how to properly do this. So here I am giving you a 15-minute overview. So you'll be competent enough, I believe, after this 15-minute overview to complete this. But if you ever decide to attend one of our in-person trainings, we go into this more thoroughly. But we'll be good enough after this 15-minute overview. So we're going to skip the first page. We don't care about that. And then, of course, these fields are obvious, right? What's the client's name, their individual name, phone, business phone, home address, city, state, the business name, the business address, the type of business, and then don't worry about this box here. So we'll call this the demographic information. That's pretty painfully obvious, right? Pretty hard to screw that up. If they don't have a business name yet, just leave it blank. If they don't have a business address yet, leave it blank, so forth. So again, we are not submitting this in this. You could almost consider this the first rough draft. So it's okay if it's not perfect, but we do need to gather accurate data so you and us can understand the client's baseline, and then we can develop a funding plan from that. So with that being said, I had nothing to do with developing the SBA Form 413. Not that you would necessarily infer that I would, but I clarify that because it's laid out in a weird way. So I'm going to explain how we fill it out, but it's not the way that you would think. Normally in our society, we fill out forms from top to bottom, left to right. Right? That's just the way it normally works. That's not the case in this form, as bizarre as it may seem. So we agreed we don't care about the first page. We understand the demographic information. So what you would be inclined to do, I bet, if we didn't have this discussion, we didn't have this training, is you would start going through top left and going down and filling this out, go to the top right and filling this out. That is wrong. That is not the way that you fill out a personal financial statement, as awkward as that is. Instead, this information here, see if I can highlight it. So all of this information is filled out last. This is the summarization of the data that's going to be extracted from the sections below. So instead of doing any of this first, we're going to start logically with section 1. So let's go through how to fill out a PFS correctly. If you have any questions, comments, concerns, you'll type that into the Q&A box of Zoom, kind of like a chat box. Okay, so first we're going to put in the individual salary. So this is their W-2 verifiable income. So if they're self-employed, they're doing things on the side. If it's not W-2 income, we are not going to put it in here. Now, I realize they might be hourly, not salary, based upon how they're paid. They might have zero salary. They might have zero of that category. We're not judging people, but we do need an accurate data set. So think of salary as W-2 income, whether it's full-time, part-time, whether it's from their own business or another business, whether it's hourly or salary. We need W-2 income here. Make sense? Only W-2 income. Next would be net investment income. And I will mention as we go through, it's not uncommon that there's going to be lots of zeros. In other words, fields that don't apply to a given client. Carlton's asking about 1099 income. I'm just about to get there. So hold tight on that, Carlton. Real estate income, then other income. This is where 1099 income comes in. It is not added up here. This is W-2 only. I know you could say, well, Tom, why isn't this form more clear? Why doesn't it say W-2 income up here? I didn't design it. I didn't have anything to do with it. I'm the messenger, right? So I'm showing you how to complete it correctly as I was trained in Washington, D.C. by professionals with the SBA when I worked for the SBA. So then we are going to then continue on. Now this, you might think, well, let's go over here to contingent liabilities. No. This contingent liabilities is actually a continuation of this. Sorry, this on, get rid of that. This on the right. So we're going to do this box here first. Pretty straightforward once I've explained it, right? Then we move on to this box. Let's read it. Description of other income. So anything that we recorded here must be described here, and that's where Carlton gets to. So let's say that they're an insurance agent and they have 1099 income. They would say who it's from. So it's 1099 from, you know, insurance company A. 423,000 or whatever it is. So they're identifying the amount and the source of anything that's from here. What's a no-go, let me erase this so we don't get confused. What's a no-go is to put something in here. If we put 423,000 here, but we need to put more decimals, don't we? Did I get it right? Oh, it doesn't like commas, sorry. It's finicky. There we go. So we can't put this here if there's no supporting documentation in this description. Make sense? Okay, so let's go back. So start with section 1, source of well, I guess start with the demographics. Go to section 1, break income down by these 4 categories. Anything that is put in here has to be described. Okay, moving forward. Section 2, notes payable to banks and others. If they have more notes payable than fits on here, we have to include an attachment to capture the rest. So this is talking about who we owe, the original balance, the current balance, the payment amount, the frequency. Now, keep in mind, and this is going to sound silly, and I'm not being sarcastic, this is the personal financial statement. This is not the business financial statement. That's called a balance sheet. That's not what we're working on right now. We'll get to that with a client, not during the setup phase, though. So this is their personal income. Now, if they own a business and they're pulling business income out of it, of course, that would go into the other income, would be stated here and described here. But the point I'm trying to clarify is for section 2, we're talking about personal notes. So for example, I pay Mercedes Financial Services, I think that's what it's called, for my Mercedes. It's a 560. So the original amount, I don't know, was like 113,000 when I financed it, took it off the showroom floor. Current amount, I don't know, I'm approximating. I'd say I probably owe 37,000 left. Now, so I put the comma in there, right? Can't do that. It's finicky on commas. Okay, so I am not saying that my S560 is still worth 113,000. It's not. It's depreciated. It's a couple years old now. But this was the original balance. That's what's asked. That's what I financed. And now it's asking what the current balance that I owe. So notice it didn't ask how much it's worth now. What's it probably worth? Maybe 80,000. I don't know. We'd have to look it up in the Kelly Blue Book or otherwise. But original balance of the debt, the current amount, and then what do I pay? I pay, what is it, 1,900 and oh, can't put commas in, 1912 or so a month. I don't remember exactly. Well, didn't like it, did it? So that's about right. And then, of course, with most bills, you pay monthly, and that's what I pay Mercedes-Benz Financial. And then, of course, it's secured, right? They have a lien against that S560. I keep it in the garage, heated and cooled, of course. But if I don't pay it, they're going to come looking for it. It's secured. Cars are secured. Homes, mortgages are secured. Of course, credit cards aren't secured, but that's the point. We're identifying the categorization of it. So these are the amounts that the individual owes to banks or to others, and we're listing out who it's owed to, the original amount, the current amount, the payment frequency, and is it secured or unsecured? Anyone have questions on that? So most of us will have multiple items, and we might have more items than we have spots for, but the bottom line is we have to provide this accurate information. So when we're going through this, we're trying to get an accurate understanding of the client's financial condition at baseline, and then you and I will need that information as we develop a plan to get them from where they're at to where they need to be. So there would be other entries, most likely, right? Whatever other debts they owe, if they owe more debts to more people than what fits here, then use an extra attachment. Any questions on section 2? Okay, section 3. Here's a key area that's often done incorrectly. So please hang in here with me. This is all of it's important, but section 3 has some common pitfalls. So again, we're going to list stocks and bonds, and if it doesn't all fit, we're going to add it onto another page. So sometimes you'll have clients that say, oh no, I don't have any stocks or bonds. Well, I would argue if they own their own business, then they do have stock in their business. So that's where they commonly overlook it. Now, we're going to talk about how to value that in a second, because most people look at this and they think, oh, do I have shares in Amazon or Microsoft or what have you? That's relevant. 401ks and retirement accounts, relevant. But here now we're talking about specifically any type of stock or bond. So I'm one of the shareholders of Business Paralegal Corp. Not the only shareholder, but I'm one of them. So you, again, can't use periods. We'll just put BPC. Invalid. Why is it invalid? Oh, no, sorry. It's number of shares. It's not a security. So I had it wrong. So number of shares, I think I have 98,000 shares of Business Paralegal. Now, I realize that some of your clients are going to be quite so sophisticated, and so maybe they don't have this formalized, but what you're going to see is that we do need to capture the value of the business that they own, as well as what we'll call external stocks. Now, cost. If you developed your own business, I mean, it's not like you went on a online stock purchasing website and bought 100 shares of Microsoft at X dollars a share. So I realize this can be a little bit nebulous, but and maybe if it's your own business, it's easy just to put, well, there's no cost. I developed the business. I didn't buy the shares, but you understand. Then market value. Uh-oh. So if it's our own business, how do we come up with the market value if it's not publicly traded? We simply look at the business's balance sheet. What is the business worth? And you divide that by the portion of ownership. Well, business paralegal is worth about $50 million on paper. Let's see if I got that right. There we go. And then if it's a publicly traded company, then it's saying, well, when did you get that number? Of course, business paralegal in my world is not publicly traded, so it would just be today's date. So you can see it becomes a little bit more vague or subjective when it's your own company, but we don't want to miss the value of our own company in addition to external stock that we own. So in many cases, for many of your clients, the biggest asset that they'll own won't be their real estate. Some it will be, of course, which we'll get to, but it could very well be the ownership of their own business. But if they've not formalized that, then it could be very difficult to capture. In general, go to the client's balance sheet, look at their balance sheet, and that should give us information about the value of the company, and we can backfill it in. Makes sense. Now, many people own multiple companies. Take Carlton. I think Carlton's got several companies, so he'd be filling out multiple lines, and you can use attachments if necessary. But we don't want to ignore our own business. Timothy's asking, it's a good point. So let's say you just started a new business yesterday for the purpose of working with us. And so it's a start, and that's what Jasmine's asking. It could very well be that you have a startup that has zero value. So you might have 10,000 shares in startup company. Cost was zero because you developed it yourself. We look at the balance sheet, it has no value. And so that could be the case, right? And you could argue, I guess, if it has no value, we don't even need to list it on here. But you understand the point. Jasmine's asking, can you use projected income? Well, this isn't about income, because if this was about income, my ownership of business paralegal would be a hell of a lot more than 50 million. But it's based upon current assets. So if it's our own business, the way that we get this number is looking at the business's balance sheet. We're not making up numbers. We could theoretically get in trouble if we made up numbers and inflated our PFS. So this has to be an accurate snapshot in time. So Jasmine or anyone else, for every business they own, just simply say, hey, if you don't know what it's worth, provide the balance sheet, and then you and I can backfill this in as necessary. Okay, so that's section 3. Section 4, a little more obvious. Real estate owned. Start with your primary residence, and then if you own other other real estate, list each one. Use attachments if necessary. It asks for type of real estate, address, date purchased, original cost, present market value. So this is pretty clear. I don't think you'll struggle with this. And again, it's okay. What if they don't have any stocks or bonds? What if they don't have any real estate? It's okay. Then you leave it blank. We're not judging them, but we're attempting to understand accurately their financial position, because that affects our approach to their capital raise and determines how much collateral they have. Make sense? Okay. And then section 5, this is another area that's often inadequately addressed. So it says other personal property. Think of if you went to State Farm or Geico and had to buy renter's insurance or content insurance if you own a home. What would it cost if you were in Hawaii? And our hearts go out to those people that lost lives and homes and businesses in Hawaii. But if a fire came through and destroyed all of your personal property, what would it cost to replace it? And that's typically equivalent to what insurance you have. And so there always should be a dollar amount here, because it's every shoe, it's every sock, it's electronics, and so forth. So they don't have to list all those out, but it's all of your personal items, and there should be some dollar amount here. We need a dollar amount. Let's say it's 165,000 total. Again, what did I say earlier? We're going to fill in this top part here after we filled out the sections. So we need a dollar amount here. We can't just list stuff. We need to have a dollar amount, because that's going to be transposed up to the top. Make sense? Unpaid taxes, if applicable, and just follow the instructions on it. If there's other liabilities, other monies owed, you might say, oh, well, if my business owes, do I list it? No, because this is the personal financial statement. And when we valued the business up here in section 3, we already took into consideration any debt that it has, because we pulled it from the balance sheet. Again, if you need help with that, don't worry. We're going to help you. Collect what you can from the client. If they own one or more businesses, get the balance sheets if available, and then you and I will go through it together to get this accurate. So don't worry about it. You'll get the hang of it. Okay, section 6, we said. Section 7, other personal liabilities. Section 8's life insurance. For those of you that are life insurance agents, you'll love this, because this gives you a relevant reason to almost do an insurance evaluation of the client. What insurance policies do they have, and how much are they worth? Now, what and I know a lot of people get confused on, right? If all they have are term policies, what's a term policy worth? Nothing, right? Now, they would still list it. Let's say I have a State Farm. I'm a cancer patient, so I have 0 life insurance outside of my group policy because I'm uninsurable, but not true for most people. But so I'm just making this up. This isn't me for real. So State Farm, 100,000 term policy, for example, because again, we're gathering this data in the sections to backfill up into the summary at the top. So they would list whatever they have. But again, my point was, for those of you that are insurance agents, this is a gold mine, because most people don't have proper asset protection, and you're going to see that through this data gathering. Okay, so section 8 is the last section. So then now we have the data that we're ready to go in and complete the top part. So let's do that as we wrap up. Cash on hand and in banks. That's how much money the person has, and it's what they can document, plus whatever reasonable amount they have under the pillow or in the coffee can or what have you. But typically, this is verified based on their personal bank statements. So we put that in. Now, I realize that wasn't anything that we talked about in any of the sections. It's straightforward, but hang in with me. We're going to see soon that a lot of these are pulling from the sections below. So cash on hand and in banks, savings accounts, IRAs. And so here you notice it says describe in section 5. So in other words, there shouldn't be anything here that's not described. Oops. Down here, because remember I said we do the sections first and then we backfill up. And I didn't like the fact that I wrote the word here because it's looking for dollar signs. But you can see for accounts and notes receivables, this is the total amount that was included in section 5. Life insurance, the total amount that was listed in section 8. But remember, it's asking for cash surrender value. What's the cash surrender value of a term life insurance? Nada, zero. So they might have $1 million term policy, but what's going to go here? Zero, because a term policy doesn't have a cash surrender value. So you're doing an amazing job of building financial literacy every time you take a client through this process, because they probably don't know what their personal net worth is. We're calculating that for them because we need it for this process, and they're learning about these important concepts. Okay, stocks and bonds, we don't just plug in some number, it's what is the total from section 3, right? So you see why I said we need to do the sections first. These often are numbers that are pulled from the sections. Same with real estate, that comes from section 4, automobiles that come from section 5, other personal property comes from 5, other assets comes from 5. So then we add all this up. So let's say that wasn't 0, that was 100, and that I have $100 of cash. So you can see that it adds it up for us. So those are the assets. Now let's get over to the liabilities. Accounts payable, how much money do we owe? Notes payable, section 2 here. So you might say, well, you might not have anything in accounts payable, which is not unusual for an individual, but we usually will have some notes payable, and that is listed down here. So it doesn't carry over. So even though I put this information in, it's kind of our worksheet, but we need to go put in the number. So here we're reporting how much. So if all my debts, which I wish were the case, it's not true, but if the only debt I owed was for this one vehicle, then I would record 37,000 for total. So this isn't how much the Mercedes is worth. It's worth more than that. I captured the value of the automobile over here. So let's say that its depreciated value is 85,000. So again, a car, for example, has 3 values. How much did I pay for it? Probably too much, right? 113. How much is owed is objective. How much it's worth is using some sort of like KBB or some sort of reference. So I'm getting the value of the car over here, as well as all the cars added up. Here is how much I owe on all of the cars. So the difference is your equity. Installment accounts, the total amount and what the monthly payments are. If you have any loans against life insurance, the mortgage. So again, over here, we capture what the value of the property is. Over here, we're capturing what the mortgage is. And of course, the difference is our equity. Any unpaid taxes, any other liabilities. So what happens then is the software adds up all of these liabilities. So let's say that I had $100, just so you see the math working. So it adds up liabilities. Then our net worth is the difference between our assets and our liabilities. So in my simple example here, it would be 85,200 is total assets. If my total liabilities is 37,100, I would subtract 37,1 from 85,2, and then that would give me the net worth. So that's what we're trying to get to, is as we're working with clients, we're calculating their net worth. And also, but to get there, we do a comprehensive breakdown of their assets and liabilities. Seems like a bit of an exercise, but it's great experience in building rapport with the client. This is often needed for most business loans. And again, in the end, it's helping us figure out what collateral do they have. Because if they have a collateral shortfall, we have an issue that needs to be resolved. A collateral shortfall is defined as when the amount of money that they want to borrow is more than the assets they have to pledge. Keep in mind, we can't pledge assets that have a lien against them. So my S560, it might be worth 85,000, and I might only owe 37,000, so I've got about almost 50,000 of equity in it, but I can't pledge it as collateral for the business loan because it already has a lien against it. Mercedes-Benz Financial Services has a lien against it. So even though you might have equity in a home or a car, if there's a loan against it, it can't be used as collateral for a new loan. Then we get down to contingent liabilities. And so this might be maybe you co-sign for a friend or a relative student loans or what have you. So these are less frequent, but we would need to put them in. They don't impact the net worth calculation directly, but it does disclose other contingent liabilities. So like co-signing for a student loan, where you wouldn't be responsible for it unless the actual borrower, the student, your nephew or your kid didn't pay for it. Any legal claims or judgments, provisions for federal taxes, other special debt. So again, this really should be a 4-hour in-person training, but in about 30 minutes, we've gone through it at a high level enough that I think each of you now can complete this with each of your clients. This is a required element when you're onboarding a client. So you need a client agreement and a client payment until they're under contract and until they've paid you either the full amount of the refundable setup fee or at least $250, the down payment on our financing program. We don't do any work for the client. So agreement and payment before work is done. Once you have a signed agreement and payment from the client, then we give them the link to complete the soft pull authorization. You'll find that link in your onboarding document, and you or someone from your team needs to complete this PFS. You will then let us know. You'll send us our 50%, of course, of the setup fee, but you'll let us know. If you don't have a Dropbox that we've provided you already, let us know. We'll get you one, and you're going to upload the client agreement into the Dropbox, and you're going to upload the completed PFS. Once you've completed the PFS and you have had the client complete the soft pull, now we're ready to put our brains together. You and us, we're going to go through the client's the baseline data and start to put together their capital raise plan. We'll determine what type of funding they might qualify for immediately and what needs to be done to get them from here to there. Now, at the very bottom of this, so there was 8 sections, which we talked about. There's the signature page. Again, we're doing this with the client, and I would call it a rough draft. It's not expected that this first draft is going to be ready to be submitted to the lender for funding. But what it is important for them to understand is that, you know, they're certifying that this is accurate. So we can't leave things off, whether it be good or bad. That becomes an inaccurate personal financial statement. And if we leave stuff off, or we don't make a good faith effort to make it accurate, and we use this to get a loan, that can be considered bank fraud. We don't want you or me or the client to be involved with bank fraud. So this has to be done with best effort, right? So, but again, we don't really need the client to sign this version, because this is what we'll call a draft on the front end. Then we will review it and create a plan for the client going forward. So that concludes my overview. Again, this really should be about a 4-hour in-person training where we're doing examples together, but this should be good enough that you can get a draft done. We've got a big group. We have 519 of you on today, which is awesome. Probably our largest training this year, live training. Who has questions, comments, concerns about this? Sarah asked, yeah, so you might want to go through it once on your own, right? Don't make your first attempt at completing a PFS with a client. That probably wouldn't be wise. But do one on yourself first. You don't have to share it with anyone, but go through the process. Then secondly, I would do one for a friend or a family member. Say, hey, I started a new business. I'm running a branch. I'm helping small businesses access capital and build financial literacy. one of the things I need to do is create a PFS, personal financial statement. Could I practice on you, Joey or Susie or Betty or Mary? And so again, you wouldn't share it with us or anyone else, but go through one or two as a practice before you start doing live with clients. So again, in the past, our staff was doing this, and it serves as a conduit for understanding if there's a collateral shortfall. But really, this needs to be done by the branch. You need to be the sole point of contact with your branch clients. We need to be behind the scenes, training, supporting, and assisting you. So does everyone feel confident now that you can go get personal financial statements completed for your clients that are already under contract or any new ones from this point forward? Doesn't have to be perfect. Do your best. Upload it into the Dropbox. We'll have the conversation. We can always tweak. We can always improve. Just be of the mindset that this is a rough draft. This is our first effort at gathering this information. Our job is, if it's not strong enough, to improve it, because there's 3 C's when it comes to funding. Credit, not what we're looking at. Collateral, what we are looking at. And capacity. All right, Eddie's asking about business income. Well, this is looking at assets and liabilities. It's not looking at business income. That comes from a business financial statement, from business bank statements. So don't concern that. Don't make this something that it's not. This is an assessment of the net worth of the individual. All right, Eric brought up a good point. So this needs to be completed for every business owner that owns 20% or more of the business. So if there's multiple business owners, this needs to be completed by each. If there's multiple business owners with 20% or more ownership, we need a soft pull from each of those. We need to look at the entire ownership group if they own 20% or more. If they own 19% or less, we can skip them. All right, Wanda's asking, is there some minimum? I don't want you to think about it in that way. We're just simply obtaining an accurate personal financial statement. It is what it is. We're not judging them. If their financials are not strong enough, we help them legally and ethically get strong enough to get approved for funding. That's what we do. That's the function of the credit and funding program. But we need accurate and honest baseline information. We get honest and accurate baseline information on the credit from the soft pull, and we get honest and accurate information on collateral from here. Okay, Sergio saying, well, how are we capturing the business assets? So let's go back to that. The business assets are captured in the valuation of the business, that along with the balance sheet. So we will get balance sheets from the business, but at this point, we're looking at the business owner or business owners. And so the valuation of the business would be assets of the business minus liabilities. So again, don't fret it. There's a fair amount to this. You'll get better the more often you do it. Do one on yourself, do one on a friend or family member, and then we need to do these for each of your clients. So for instance, we have Miss Dash on. She's bringing on 70, I believe, Miss Dash, you can correct me if I'm wrong, 73 new clients this week. 73 new clients this week. So we need 73 contracts, 73 payments, 73 soft pulls, and 73 personal financial statements. But remember, you're paid $1,000. Well, assuming you're charging normal, you're collecting a $2,000 refundable setup fee when the client enrolls. We split that 50-50. So you got $1,000 in your pocket. Even if you spent an hour with the client, you just made $1,000 for the hour's work. And then, of course, you're making the lion's share of your income, as we all are in the back end from the capital raise. That's why now maybe you're starting to see why it's important that clients have some sort of financial contribution on the front end. Because some of you have said, well, let's not charge anything up front. Let's just get it all afterwards. Well, that would be fine if we were just loan brokers. But you and I are not loan brokers. We're technical advisors. We're gathering data, assessing that data, and then improving the client's profile to become qualified. This alone will probably take you 30 minutes to an hour with each client. Your time is valuable. So maybe you feel even more confident now charging the refundable setup fee, which is refundable from clients, because there's time and effort and intellectual capital that goes into the process of helping these clients. Carrie's asking, do they have to do this? Yeah, this is necessary for us, you and I, us, to get them a capital raise. So if they refuse to do this, that would be considered a failure to participate. And that would put them in breach of their agreement. And if you look at the way your agreement's written, if they're in breach of the agreement, there's an acceleration clause. So they would owe you the amount owed under the agreement because they're not participating. So, you want to be transparent. When clients enroll with you, you want to let them know, hey, we're going to be working on your file. We're going to be doing a soft pull, no hard inquiries that impact your credit score, didn't cost anything. We're going to be creating a personal financial statement that's needed, and so forth. So there's work involved. Jasmine asked, what if they're not using their personal assets? That's a great question. So there are different, and Jasmine's got a great point. There are different types of funding, and each type of funding has its own underwriting criteria. So it is true that all of this might not even fit into the type of funding that we end up going after for them. But you and I, we on our side, we need to know what the credibility elements of the client is to be able to create a funding plan. So even if they're pursuing a type of funding that has no PG, no personal guarantee, we still need the data set to create a plan. Now, we're going to get business information too for those that have a business, but that's not our topic today. Our topic today is the personal financial statement. But this is invaluable. And again, those of you that are insurance agents, this is like selling policies like you've never sold before, because now you've got a great, intimate, professional relationship with them. You know a lot about them, and you know Section 8. Where are they in terms of their insurance? So I don't sell insurance. I used to be licensed. I'm not anymore. But if you are licensed or have any business associates that are licensed, this is a great prospecting tool. So we're not using this to go sell insurance to your clients. We're not going to talk to your clients. We're not going to talk to your clients. Lon's asking some questions that are irrelevant. I'm not barking on Lon, but we don't care about the first page. This is the form from the SBA, but for your and my purpose, we don't care. Don't worry about checking any of these boxes. It doesn't matter. And we also don't care about this line. So don't worry about that. Everything else we care about. Nicole asked about types of funding. Yeah, there's all different types of funding. We can facilitate any type of funding, but we need to get baseline information to see what they qualify for. And that is primarily, the baseline information is primarily based on that soft credit pull and this PFS. In the past, we were doing this for the branches. We found that that wasn't the best choice. So we're going to have the branches do this because you're their sole point of contact. It confuses them when other people are reaching out and trying to do things. That's not the best client experience. You're the branch. You have the client agreement. You or someone on your team needs to get this completed. Any other questions, comments, concerns? It's actually a lot of fun. Maybe it seems a little intimidating at first, but again, do one on yourself. Then do one on a friend or family member, then I think you'll be ready to go. And again, it's a rough draft. It's not going to be sent to the SBA or any other lender. This is going to be the initial rough draft. You collect, You upload into the Dropbox, which we'll provide you if you don't have yet, along with the client agreement. You'll send us half the refundable setup fee. You'll have them complete the soft pull. So those are the 4 elements, so we can get the client's funding plan put together. Any other questions, comments, concerns on this? Just do your best. You'll obviously get better the more often you do it. It's true with most things in life, but you'll do good enough, I'm sure, if you follow the instructions we discussed. I would not recommend just sending this to the client and saying, filling it out, because they probably won't do it accurately. Plus, you're not providing value. You're not building your rapport with the client. Make sense? All right, so I'm so sorry for running long, but this was a huge training. In summary, I sent out to each of you a 4-minute overview video that you may want to view and use for promotion. But thanks, everyone. We'll see you back tomorrow morning. Let us know how we can help you. Bye-bye.